Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor, 1914. I'm back, baby. Your boy is back. Yes, I had I would say a bit of a rough week at work. It wasn't bad. It just had to do a lot of training. I was the one that was actually doing the training for a lot of managers. But I'm back to recording. Today we're going to go over my dividend income in my dividend growth portfolio. That's from what you see right here. I've named it Mr. Rogers 1914. Yeah, your boy. Get my deep voice on. Yeah. Which, as you see right here, my portfolio is at 55,000. The last time I did my portfolio update was about a month ago, and I was at roughly $53,000. So as you all know, uh, when I was making those videos, like, hey, I'm dropping $1,500 into the market next week, that following week. Guess what? I'm a couple weeks have passed now, and we're into April, and I indeed dropped $1,500 into the market. And we're gonna go over several positions in my dividend portfolio, some that you're familiar with, and some that you are probably not familiar with. I change my strategy all the time because, as we all know, I am planning to try to retire at 50. I'm at 35 years old right now, so I need compounders. You see right here, I have my portfolio is up roughly close to $9,000. I have a market returns of 19.31%, smooth. I have a yield on cost of about 1.02, and we're gonna go through it. We are gonna go through it. Here is my Seeking Alpha. And with my Seeking Alpha, you'll see I added all of my positions that's currently in my dividend growth portfolio, and I also took out positions that really really don't really mean anything. So what you see right here, here's my portfolio is at $55,444, and some new position that I've added is right here, applied materials. I've added JPM, uh, JP Morgan Chase. I've added Moody's Corporation. We're gonna do a video soon about Moody's Corporation and what that is. I've added Waste Management, got a gem, and also, believe it or not, I added Meta. Since it's paying a dividend, I decided to add it to my dividend portfolio. I thought it was going to be categorized under the tech space, but the way they categorize Meta, they put it in more of the communications service sector. So with my uh, tech play, I decided to add Applied Materials, which is a semiconductor company, into my tech space. And I'm also thinking about adding another uh, semiconductor company called Qualcomm. I'm thinking about adding it to my portfolio as well. But yeah, so let's see how much dividend income that I made for the month of March. Here's my dividend portfolio on trackyourdividends.com. As you see, have a portfolio yield of a 1.7 with a yield on cost of 2.03. My annual income right now is shy of $1,000 per year. My portfolio beta is 1.03. 1.0 is the market. Anything less than 1.0 means that if the market goes up, it's going to go up a little bit to the market. This shows that whenever whenever the market goes down, my portfolio is going to go down a lot because it's very volatile. Whenever the market goes up, my portfolio is going to go up by a lot because my portfolio is I have a huge. Let me show you. I have a huge exposure into tech. Here you go. So the tech right here. Here's my tech pie. My tech pie has Microsoft, Apple, ACN, which is Accenture. I have Applied Materials. I have AMD. I have Broadcom. I have Intuit. I have Lam Research, and of course, the big dog, Microsoft. I am heavily invested into tech, and when you invest in tech, it's more growth. But tech really doesn't pay high dividends. It's more so on the growth and the total. I would say total return type of play, but in terms of high dividend income and whatnot, that's not the play for the technology space. So for March, if I would have done the video, if I would have done this video, I would say a day or two ago, you guys would have been able to see March. But since I'm doing it here on April 5th, let's just look on the June space, which would be because we can pay quarterly. So whatever the dividends paid in June would have been what I got paid and recently just now. So recently, I received a dividend of $9.05 from Aflac, $2 from Applied Materials, which is nice. Broadcom, and if you guys know how much, let's show you right real quick. Broadcom, which is AVGO, it's $1,339 a share, and I was able to accumulate thus far 6 shares of Broadcom. Yeah, I really can't wait for Broadcom to do a stock split so I can buy more shares of Broadcom. So with my 6 shares of Broadcom, I'm getting $31.76 per quarter. Chevron paid me $21.54. Home Depot, if you have your own personal house like I do, go to Home Depot and Lowe's all the time. Pay me $24 last month. Kroger, which I go to Kroger pretty much every other week or every week because I'm on this healthy diet tip and I've been buying a lot of fruits and vegetables. $26.03. Boom. I started a new position with Moody's. It's a low yielder, so they're gonna pay me a measly 76 cents. Meta, they just recently started a dividend and it's low. Right here, I'm investing to Meta, Applied Materials, and stocks like this, so that I can really just get my portfolio growth up and then sell it 10, 15, 20 years down the line. And I'm pretty sure, I'm hoping, cross my fingers, I'm hoping the US ban TikTok because Meta will be able to benefit greatly into users and people craving. If they can't use TikTok, they're going to use Instagram, Facebook, and all those different tools a lot. And if you invest into Meta, you'll benefit greatly. Hey, what can I say? I received $19.54 for having roughly 26 shares of Microsoft, $10.35. I'm receiving every month for what else? Snap-on, I was paid $28.83 and a measly $3.75 for waste management. For a complete total of last month, I was paid $180.22 passively. That's passive income. I didn't have to do anything. All I had to do was buy the shares of these particular companies, reinvest the dividend, and just continue to just invest more into said stock. Lastly, right here, I just want to show you nothing about to make this video any longer. Right here, it shows I dumped roughly 1,400. Actually, I dumped about, I want to say, close to $1,600 because I dumped a little bit more into American Express, but I dumped roughly $1,600, and that's how you see that my video before in March, my portfolio balance was roughly $53,000. Now I'm inching close to $56,000, close. And right here, when I get paid next week, I'm going to allocate roughly $900. I'll dump $900 into the market, and I'm going to buy some waste management, Aflac, some Moody's, Caterpillar, Meta, Costco, and JPM. And I'm also dollar cost averaging and putting roughly $330 to $350 into Bitcoin because I one day want to get my Bitcoin allocation to roughly 0.15, and then after I accumulate 0.15 of Bitcoin, anything that I accumulate after that is gravy in my eyes. So that's the goal. So next week, I plan on dumping $900 into the market to buy those said stocks, and we should see my portfolio balance grow. We should see my portfolio balance if track your dividends act right, which is evidently it's not acting right for your boy. It's not acting right for your boy. Come on, there we go. So by me adding $900, it should put me in a tipping point next week to 56,000, and I foresee that by the end of the year, I should be close to $65,000, and hopefully, as I embark road to 100K. Remember, one of my goals is to get this dividend growth portfolio to 100K. Hope you guys really enjoyed this video. Just saw that I made $180 passive income for the month of March, and we build it while we fly, baby. Peace. All right, I'm out.